I have the great privilege to have a very good friend of mine in the studio with me today. He is the author of a brand new book called What Would the Rockefellers Do? He's also a New York Times bestselling author. Welcome, my good friend, Mr. Garrett Gunderson.
Hey, Mike.
Hi, man.
Hey, really good to be with you, man.
Yes, it is. It is. This is great. So, for people who don't know who Garrett Gunderson is, what's the commercial? What do you tell people you are or what you do when they ask you?
I'm a money nerd, man. I love studying finance. It's been my passion since I was a teenager. I won $5,000 as a young entrepreneur, and I wanted to invest that money. I think most teenagers want to spend it, impress someone with it.
Yeah.
I wanted to invest my way out of the small coal mining town I grew up in.
I'm exactly the same way. I wanted to buy a computer so I could program my way out. I bought tools. That was my strategy. So I totally relate to that.
Yeah, and I just got a lot of different advice as I asked more people. The more people I asked, the more confusing it became. And when I was 18, I made my first investment. It was only $70 a month because that's what they were selling me, and they were presenting it at 18% a year. And then I was in school in econometrics and proved out that was not going to happen. 100% chance of that.
What was the investment?
It was called a variable universal life policy. I call it very ugly life because it's high expense life insurance, and like, oh, you're single, you don't have any heirs, but to worry about. But this would be really tax efficient. I'm like, I'm also a college student. I don't know that I have a lot of income to be tax efficient with, but bought that. And I started asking more and more questions after I figured that wasn't the right thing. Got offered an internship, which was really kind of code for come tell people you're a financial planner while we peddle products to your family and friends.
Right.
And that's really how I kind of got started. And I think that the key kind of defining moment for me was when the market started to go down in 2000. Because from 98 to 2000, my family and friends thought I was the Doogie Howser of finance, man. Their money was going up, life was good. But then it started to go down. And I didn't want to go to family reunions and go, hey, you're in it for the long haul, or the market's on sale. Like, the market being on sale would be like us buying these sport coats, and then the next day they're on sale for 50% off. It's like, hey, we already bought them. We're kind of out of luck. It devalued ours, right?
Yeah, exactly.
So I didn't like all that, and I had a mentor, Steve Harrop, he managed $5 billion in muni bond funds before he became a professor at the university that I was a senator for. And we sat down and talked, and he helped walk me through. And I met with all my clients between March and May and got all but one completely out of the market. And I said, I never want to go through that pain again. I never want to have to face people and say, sorry, your money's been lost. So I said, what else can I do in the world of finance that has more predictability, that has more protection, that improves their life? And that's when I really started doing what I do now.
All right, so let's dive into you've just released this brand new book, which is What Would the Rockefellers Do? So I think the big question, what I'm going to look for today are some giant nuggets that you can share with entrepreneurs that are going to help them make and keep more money. But let's begin with the book first, which is why did you write the book and why is it important? So
Michael Eisen is my co-author. And 17 years ago, we decided to go somewhere once a month on a tour to find the best financial minds and go to the best financial events. And so we've known each other for a long time. And at one time, he got heavily invested in real estate and in a bunch of other things and saw it was a lot more complicated than it was presented to be. He lost a lot of money on a lot of deals that were outside of his expertise. And so he went back to some of the core fundamentals in those first 2 years. And the number one comment he and I have heard is, I wish I'd have known this before. I wish I would have done this before. Or people that did do this early on in our careers are like, man, this has been the single best, never fail me type of thing I've done. So we're like, we've got to put this into a book.
Okay.
And he had never written a book, but I had. So we spent a year collaborating, and it would have been done a lot faster if it was just me going through Publish and Profit. But, but we got through it and used a lot of what I learned from you to get it out there.
That's good.
But that was the thing is, for me, when I sat down with my grandfather, just one more story. I sat down with my grandfather because his sister got really sick. And they're an Italian family where 100% of their life savings was in her bank account because she never got married and took care of their mom. And so when she got really sick, they were worried the government and these institutions are going to take all the money if she goes to nursing care and all this kind of stuff. So they brought me in. This was my first time. It wasn't like, here's my little grandson, let me give him some money. It was like, we really need some help. And I solved the problem. But then my grandfather looked at me and he said, when are you going to get a real job? So I solved this major problem for them. But then he was like, well, when are you going to get a real job? And I was like, well, this is one for me, And I ended up continuing the path that I was going down. And I showed him 6 months later how much
You
money
say,
I'd
"Don't be a
made for
dick,
my
Grandpa."
business.
Yeah, anyway.
And you know what? He saw in that moment that I changed our family's destiny. Because he took all this risk coming over from Italy, and he never wanted to see his family be in pain, and he'd been grown up on these old rules of get a job, he was a coal miner, work hard, and then one day, someday you could retire. But man, that was a hard life. And so he saw that, hey, this could be different. And then I thought, man, he's had so much impact on me. What if I could have an impact on my great, great, great grandkids because of something called the Rockefeller method and exactly how they've done it, where they're donating $50 million a year and all their heirs are still receiving money, where the Vanderbilts, 54 years after the old man died, they were broke. So I wanted to really help people out because the wealthy know this and have known this, but I wanted everyone else, the business owners that are just starting up, or they're making good money but don't have high net worth, or the middle class that we hear they're not saving enough money. It's not they're not saving enough money, it's that 90% of the time they make financial mistakes that wipe them out. And if they could avoid that, they'll change their family's financial future.
All right, so let's get into some of the big money strategies, and we'll do some rapid fire nuggets here.
Great.
So, and both what's in the book and what are some of the things that you can share that someone can listen to, implement now, and actually start changing the direction. You know that my audience are entrepreneurs. They want to make more money. That's what they're attracted to this program for. So what do you say to them?
So 1/4 of the book focuses on the 5 C's of cash flow banking. And there was a CPA that works for the Rockefeller Foundation that said, you've nailed it, this is exactly what the Rockefellers do. And part of that methodology that now applied to her that let her start doing the things that she's been working for them for so long was the 5 C's. The first one is you classify expenses. Don't shrink your way to wealth. Don't pinch pennies because you'll miss out on dollars. So it's what type of expenses? There's 4 types. Destructive, lifestyle, protective, and this is what the wealthy people really understand is protective, and productive. And as a business owner, isn't it nice to know that someone gets productive expenses? You hire the right person, you invest in the right campaign, you put money into marketing.
So those are the ones that you get a fast ROI from.
Yep. Okay. And you see more on the other side. Now, protective is estate planning, corporate structure, liability protection, so that no one could come in and confiscate what you're building or derail you because of financial surprises. Lifestyle, you just pay cash for those. You want to take a trip? Take the trip. You want nice clothes? Buy those clothes, but just pay cash so you don't go into debt. And destructive are those things that lead towards debt because you're over leveraging on something you don't understand. You have reoccurring expense that you haven't used, like a gym membership that you've never been to the gym. Just things that are actually hurting your wealth. You eliminate those. And now that you know there's 4 different types, there's some that you eliminate and there's some that you increase. Then the second C is you capture wealth. So instead of budgeting and having all these buckets and going, this is how much money I have for entertainment, this is how much money I have for bills and all that kind of stuff, you just pay yourself first by having an automatic sweep of money every time you go to make a deposit into this wealth capture account. Set it up with your current banking relationship. It could just be a checking, savings, or money market. And then the next C, the third C, is you learn to do what the banks do when they get a deposit. And
which is what?
They start building cash flow, and the money they put in reserves, they get 4 or 5% tax-free, which is exactly what I outline in the bank or in the book. But part of it is now you start financing your own things because you're having this wealth capture rather than pay the bank for it. So you earn the interest rather than pay it.
Right. So you're borrowing money to yourself, essentially.
Yep.
Okay. And so if you were going to, let's say, give someone one big takeaway, one big idea that anyone can do right now that's going to make an immediate dent in, well, first of all, it's what the Rockefellers would do and also make a difference in cash flow, what would it be?
So, since the 5 C's are around cash flow, the next one is going to be capitalizing, right? So how do we capitalize? We capitalize by finding the quickest ways to cash flow with no straining yourself or tightening the belt. And so here's quick ways that you could do it. This will be the rapid fire piece.
Okay.
Take any underperforming asset. And
for example, like what?
Certificate of deposit, bond, a mutual fund, money that's sitting there doing nothing, double E bonds. I mean, there's people that have money laying around, money that's inside of a retirement plan, and pay off any higher interest rate loans with any money that's underperforming.
Okay.
And when you do that, the second step is, then you look at your credit score. And if that boosts your credit score above 780, if you can get that above 780, you could go renegotiate the interest rates on every other loan that you have. So a quick way to do that is, let's say you have a paid off car. refinance that car and pay off a credit card. Because a car loan helps your credit score, where a credit card hurts your credit score. And so now all of a sudden, you might be getting 1.9 or 2.9% rather than 7.9 or 10.9%. That's money in your pocket. And that's a big deal, because just imagine, if you could buy something for $1 and sell it for $2, that's 100% markup, right?
Right on.
So if I'm paying 5% interest and I'm only earning 2, that's over 100% return if I pay that off because of the spread. So that's a big deal. Then you can go refinance, and there's a thing called streamlining, where we've had this guy Jason in in Tahoe, who did this, boosted his credit score, and then with the same person that held his mortgage, he's able to do a streamline, which meant he didn't have to go pay a mortgage broker, he didn't have to do a whole bunch of paperwork. With a one-page document, lowered his interest rate. So now it saved him $751 on his mortgage because we improved his cash flow by taking an underperforming asset. So it's just looking at everything as a big picture.
Okay.
So that's some cash flow tips.
Great. So one thing that we put together is you put together a course based on the book that we're giving away, which is at mrbz.com/WF Money. But why don't you talk a little bit about what that course does, what it teaches folks when they go through it?
Great. So we covered 4 out of 5 C's. It's going to go over the basic 5 C's and what they can start to do. So it's, how do you start paying yourself first? Where do you find the money to start doing that so you don't have to cut back? And then how do you set up the infrastructure to pass on the wealth from generation to generation, so it has a strategy on how you buy net worth instead of build net worth? How you can boost your cash flow 20 to 50% in retirement because of the strategies you set up today. It teaches some of the advanced strategies that really wealthy people have used, like charitable remainder trusts, or even things that my coal miner dad used called pension maximization, which was a way for him to boost his retirement income by 20% for anyone that has an annuity or a pension. So it goes through some of those details so that you understand, how did the Rockefellers think, what's the basic framework they designed, and what are the quickest steps that you can start implementing to see a result.
All right, and these are for folks even if they don't have extra money laying around, or for folks who have small businesses and want to grow. And
I started with $100 a month, which got me a piece of this methodology when I was 19 years old. So people can start at that level. If people just, there's a lot of people feeling like they're paying too much in tax, it'll give them some insight there. There's people that just feel like, if I had more financial organization, I know I could find that money. So this, more than anything I've written or anything that I've done, has a much more mass appeal. We actually took some pieces of this, put it into 2 different colleges, and we're seeing good results. They're going to make it a permanent course for sure in one of the colleges, and maybe expand the course in the other college. So yeah. Great.
All right. So all you need to do then to get more information and get Garrett's course that goes along with the book for free, head on over to mrbz.com/WF Money. Thanks for being here, man.
Hey, thank you so much.
Appreciate it. See ya. Boost your income, increase your influence, and amplify your life. Sign up for the Mike Koenigs Show podcast to get extended bonus interviews and get the entire show automatically delivered to your smartphone, tablet, or computer every week. Now, the way to do that is to subscribe to the video podcast at mrbz.com/podcast, or if you'd like to get the audio podcast version, go to mrbz.com/audiopod. Make sure you leave a review too.